Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on the tech sector, XLK, Apple, and Facebook. So our lower high looks to be set. We had the gap up open and a lot of profit taking with a close down near the low of the day. Tomorrow's going to be very telling for me. If we see another bear day to the downside and another red day, that will tell me that our top has been set, our lower high has been set, and the bears have short-term momentum. And what I'm going to be looking at is the low of this consolidation down at 55.62 and then the gap. And there's a gap to fill at 55.37. So I'm a bit cautious in the tech sector as a whole here. And today, really, the way we did a complete 180 from strength pre-market and right at the open to bears taking over and bearish momentum at the end of the day, that really combined with the weekly time frame and combined with the potential bearish reversal head and shoulders pattern, it's too soon to call that there. We do need a right shoulder as we pull back down towards the 50-day moving average support. But I'm just going to be very cautious here in the tech sector. The tech sector on the weekly time frame has been absolute fire for a year. And we know more significant consolidation is going to occur at some point. Now, people have been looking for it to occur for quite some time now, and I'm going to be cautious here. I'm not making a bearish call, but I do believe that we could see this trend change in the short term to start favoring the bears more significantly in this tech sector in Q3. This is a very early call on my part. I'm not going to be making bearish bets anticipating that. I need more signals, but there's enough that has me cautious being bullish. Apple on the daily time frame. Weakness, looks like a lower high, has been set here as well. 50-day and middle Bollinger Band resistances closed down near the low of the day after a bullish break of resistance of 147.50. Bulls could not hold on to that momentum, and we saw that turnaround. Support is down at 144.61, and then the 100-day moving average of 143.43. So Apple is the weakest tech name on this bounce so far, and look how tight we are wedged between the middle Bollinger Band support and the exponential resistances, and if we see a loss of this middle Bollinger Band, it will be a clear bear break. This is a potential bear flag on the weekly time frame right now for Apple, so if the tech sector does continue to see some weakness, Apple is going to be a lead play to the downside due to this pattern that is setting up on the weekly time frame and due to the weakness we have seen on the bounce attempt. Facebook is a lead bull. It gap up open to a new all-time high and then also saw significant profit taking. But even then, we have so many supports here. I'm looking at 152.65, 151.88, middle Bollinger Band, and then there's a gap to be watching at 150.83. So profit taking, no doubt, but a new all-time high, keeping that higher high going. And we'll have to be watching to see where we close this week with exponential supports, but really it's just a completely different setup with a higher low and a higher high as opposed to a lower high and a lower low on some of these other names. So if we do see weakness in the tech sector, I will not be looking to play Facebook bearish because it is one of the strongest names. I'm going to be looking to play the weaker names bearish, with Apple being a lead bear in the tech sector. So again, very early call there. I'm not saying we're going bearish Q3. I'm saying I'm starting to see a couple signs that have me starting to perk up and pay attention, and I will be all over it if we do see a little bit more follow through and a little bit more of a bearish setup. So I appreciate you watching. Bull's still strong. Need to see the S&P 500 roll over as well and see some weakness and a loss of the daily middle Bollinger Band in order for this tech sector to see some pullback. If the S&P 500 continues to hit new all-time highs, it's not really realistic to think that the tech sector is going to turn around and suddenly enter a downtrend. So lots of factors at play, just giving my initial reading as to what I think could potentially play out for Q3 2017. Thanks for watching. See you tomorrow.